Good morning, everyone. Trust we are doing good. Yeah, welcome to another webinar that we'll be holding today. And the topic is relationship between gold, oil, and Forex. Okay, that's the topic we'll be dealing with today. So before we actually dive right into it, let's do a quick sound check. If you can hear me, do drop a message in the chat box. If you can hear me loud and clear, do drop a message in the chat box, please. Okay. So I'll wait for us to drop messages in the chat box. Oh, great, great. I'd like to get more responses actually. Okay, great, 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 great. Can you all hear me now? If you can, that means we can actually begin with the webinar. So we have quite a less number on here. We have just 10 people on the webinar. Christian, thank you for joining us. Kilichi, thank you for joining us. Maduka, I just spoke with you a few minutes ago. Thank you. Thank you very much. And Soya Fanla, thank you very much. Thank you for joining us on the webinar. It means a lot. And thank everybody for joining me on the webinar. It means a lot. Like the fact that I'm able to call and you guys just hop on the calls with me. It's quite amazing. It's quite amazing. And I really love that. Okay. So I'm just going to try to while time away a bit for 10 minutes or so. And so we can get more persons on here actually. So we can get more persons on here actually. So real quick, if you're new on the webinar, you've got nothing to worry about and you don't know what we do at Ego Global Markets, I'll do well to walk you through on it. Okay. So Ego Global Markets, we're actually a financial um, broker here in Lagos, where we give people or clients access to trade the financial markets, globally, and we give access to our clients to trade the financial markets, be it in naira or in dollars. Okay, so that's generally what we do in the global markets, and we have a ton of products for you. A ton of products ranging from MT4 to Cloud Trade and to our copy trade platform. And I believe all these products are for you to get you started and making money in the financial markets. So that's just the one of the very few things we offer at Eagle Global Markets. And also we want to launch our stock brokerage firm soon, Tajiri, and that will be out possibly media or something. But it's one platform you don't want to miss. You start trading stocks, local stocks and foreign stocks. You start trading them on our platform, not as derivatives but as stocks and shares themselves. So it's one major move in the markets that we'll be bringing to the markets, and that will be the first ever owned African brokerage firm, owned by an African, not even in partnership with an European, just the first ever owned by an African. We are all excited about that. Yeah. Good morning, morning, good morning. Hope we all are doing good. So let's quickly do a Q&A on our last that we had a Q&A real quick. So, has anybody at all got any question from the last class that we had? Is anybody any question from the last class that we had? If you have a question based on the last class that we had, please let me know. The last class we talked about learning how to trade using copy trading. If you have any questions about that or the last two classes or previous classes, please ask before we proceed. Okay. The last two classes we spoke about the anatomy of a trading plan. Has anybody got any question at all? Any questions? Okay, Karachi said, hello, I'm new to this platform. I just started the lectures from the YouTube channel. And he said in the first video, you said we should buy when high we should buy. I thought it was the reverse. The financial markets actually work in a very, very dynamic way. When price tends to go higher, we buy and sell when the price is very, very high. Okay. So there's a logic to that. You could reach out to me on WhatsApp after this call and I would break down those logics to you properly. You will see it on your Zulu Trade platform. You see it on your Zulu Trade platform. On the website, you'll find it there on the Zulu Trade platform. Um, Tisha Eldgard, I will drop our YouTube channel link right now in the chat box, so you could go and get started from our YouTube channel link. Okay, and also I will drop a link to sign up on our platform in the chat box. You could get started with that also. So that would enable us to assign you to an account manager that would actually walk you through or possibly navigate you through the basics of the financial markets. Then you get to attend our classes and all. Also, if you feel learning about the financial markets will be stressful for you, we could do well to use our copy trading platform. That makes it very, very easy for you. So I'm sending in the YouTube channel link right now and also the link to sign up on our platform. Okay, you already have an account manager. Okay. Since you already have an account manager, just reach out to your account manager after this call that you want to speak to the educator or the financial analyst, and they will get you set up with me. Okay, so we've got nothing to worry about. So the best or the very best bet is to get started from our YouTube channel. Great. Okay, so I think there's one question in the question section. Yes, the closed trades of whoever you're following, you would find it. You have to go to your dashboard to find it there. You have to go to your dashboard to find it there, and you will see all of that there. Yes, the copy trading process is on our YouTube channel. You can go and check that out on our YouTube channel. So, would that be all the questions for now? So, is that all the questions for now? Is that all the questions for now? Okay, if that is all the questions for now, let's dive right into today's class. Okay, let's dive right into today's class. So, I'm sharing my screen right now. So, I'm trying to share my screen actually to show you guys the slide we'll be working with today. Okay, just to show you guys the slide we'll be working with today.
Yeah, man.
Okay, so great. Share my screen right now so you can see it. Okay, can you see my screen right now? If you can see my screen, please let me know. If you can see my screen, please do let me know.
Can you quickly tell him? Let's quickly, what's the rate? Oh, yeah, let's do this thing now. What's the initial rate?
Can you see my screen now? If you can see my screen, please do let me know. Okay, great. So before we proceed, if you were part of my last webinar, signify in the chat box. Okay, just signify in the chat box.
So what rate?
If you were part of my last webinar, please signify in the chat box. Please signify in the chat box if you were part of my last webinar. Okay. Okay. So if you're in the last webinar, that means you actually won a merc from me. If you did carry out the task I gave you. But if you were not on my last webinar, you've just won a merc for yourself. Okay. So I'll be giving out mercs today. So just just follow along the class and I'll give out stuffs on the class as well. So those two persons that were not part of my last class, that's Kasim and Bayo, I would be giving out stuffs to you. Okay. Okay, Karachi also. So I've gotten three people, three people I'll be giving stuffs to. I'm taking note of those people. I'll just be giving out stuffs to 5 persons. Okay. Bayo, Adio, and okay, Karachi, and to share Edgar. So one more person, whoever is new on the webinar, will give stuffs out to that person. So you guys just want yourself a merc. I'll reach out to you after the webinar to get your details and get the mercs sent out to you. So first off, the topic stays the relationship between gold, oil, and forex. Now, if we do understand properly, we do understand that gold and oil are commodities in the financial market. Yes or no? Yes or no? I'd like to get a response. Do we all know that gold and oil are all commodities in the financial markets? Now, now that you understand that gold and oil are commodities in the financial market, we can all agree or believe to say that the relationship between forex and commodities, or commodities and forex, right? Okay, good. Now today, what we'll be learning in this session, is understanding what Forex and commodities are. Forex, and commodities. Then we'll be understanding what Forex and commodities are, the personal relationships they both have between one another. That's correlation. Um, is the relationship between these two to your advantage or disadvantage? Then capitalizing on this relationship to earn more from the financial markets. Do we all get what we'll be learning? So that's what we'll be learning in this webinar. That's what we'll be learning in this webinar. So let's dive right into it. Understanding what Forex and commodities are. Understanding what Forex and commodities are. Okay, I said in this webinar, majorly we want to know Forex and commodities, the major relationship between them. And I said, first thing first, we need to understand what Forex and commodities are. Then secondly, we need to know the personal relationship they would have between one another. Thirdly, we need to understand if this relationship is to our advantage or disadvantage. Then I said the last thing we need to do is capitalizing on this relationship they have to earn more from the financial markets. Do we understand? Do we all understand? If we do, please drop something in the chat box. Okay, good. Now, first off, understanding what Forex and commodities are. Now, let's start with Forex. Forex is termed as foreign exchange, right? Do we all agree to that? That Forex is termed as foreign exchange, and it's a $6.6 trillion market that is traded daily in money volume. We do all agree to that, right? Good. Now, commodities. We said commodities are goods, okay, that are used interchangeably with other goods. Now, when it comes to the finance space, these goods are not physical, but they are literally just a valuation of the real good. Let's take, for instance, if gold is actually at, let's get a value for gold. If gold is actually currently trading at $1,769 per ounce, what that is just telling you is that is the value for 1 ounce of gold. So you are not owning gold in physical, but you have a part of gold in the financial markets. Now, that is just the major thing between Forex and commodity. So gold is a commodity. Now, if we talk about oil also, if we check the current price of US oil, we see that the current price of US oil is at $64 per barrel. $64 per barrel means you're not buying a barrel of oil, but you actually own in the financial markets a stipulated amount for a barrel of oil when it comes to the financial markets. Do we all understand? If we do, please drop something in the chat box. And if we don't, I will use a lifetime to explain it the way I always do. Okay, let me use a lifetime to explain it the way I always do. Now, I said it before and I will say it again. Imagine a Ferrari Pista costs $1 million. Now, you have $1 million but you don't want to own a Ferrari pista, but you just want to own the price of the Ferrari pista. It's still the same as saying you have a Ferrari pista, but you don't like physically have it. So the money is how would I say? Would I say a money in the air? Yes, let's put it that way, a money in the air, but you own a Ferrari pista. Do you understand now? If you do understand, let's drop something in the chat box. Great, great, great. Now we now understand what Forex and commodities are. So Forex is majorly currency pairs. Okay, Forex is majorly currency pairs, while commodities are gold, oil, silver, and the likes. Okay, gold, oil, silver, aluminium, copper, oil, and the likes. Now that's just what Forex and what commodities are. Are we clear on that? If we are clear on it, please let me know so I can proceed. Okay, now let's move on to the next thing, the personal relationships they both have between one another. Okay, so this is where we have to go in depth and start using the whiteboard to explain things. Now, when we say the personal relationship they both have between one another, let's use a whiteboard. Let's use a whiteboard. So I'll be sharing my screen right now.
Please bring me mine on first.
Okay. Now, can we all see the whiteboard? If we can see the whiteboard, please let me know. If you can see the whiteboard, please let me know. Morning, Hope. Hope you're doing good. Okay, so now let's say, for instance, this is commodities. And this is Forex. Okay, so now commodities and Forex, they have relationships between one another. Okay, they have relationships between one another. The relationship could be positively correlated or negatively correlated. That means they could be friends or they could be enemies. And there's a certain structure to that. Now, in finance, for every dollar bill printed, we always have an equivalent of that dollar bill put in a reserve in form of gold. Okay, for every dollar bill printed, we always have an equivalent in gold kept in the reserve. Okay, now this is the general idea behind it. If the value for dollar reduces, there will be an increase for gold. That means dollar and gold are negatively correlated. Do we all understand? Oh, I'm very, very sorry. I can't zoom into the whiteboard more than that. I can't zoom into the whiteboard more than that. I'm very sorry. That's how it's programmed, actually. Can we all see it now? Okay, let me give an example. For every beverage produced, we always keep a pound of cocoa in a reserve. Eribemi, did you understand now? If we create or we produce one Coke, we will keep one cola in a reserve. Everybody, do you understand now? Good. Now, for every dollar bill printed, there is a gold value, equivalence of that value kept in a reserve. Now, the whole or the major relationship is how they affect one another. The personal relationship they have, which is how they affect one another. Now, if gold goes up, dollar comes down. If oil, be it UK oil or US oil, if it goes up, CAD, the Canadian dollar, goes up also. Because CAD is also a producer of oil. So if there's an increase in oil price, the economy for CAD goes up also. Do we all understand? Are we following? I'd like to get more response. Okay. Are we all following? Good. And so on and so forth. Like the correlation or the relationship between commodities and currency pairs is so wide that not even everyone knows it. But I'll share the little I know with you guys. So first thing we said is if gold goes up, exactly, gold is to dollar, oil is to CAD. Okay? Gold is to dollar, oil is to CAD. Gold is to dollar, oil is to CAD. Now, the Swiss franc, okay? The Swiss franc, let me type it out. The Swiss franc is a safe haven. It's a safe haven pair, okay? And gold also is a safe haven. If gold goes up, the Swiss franc would also go up. Okay, so they correlate positively together. They correlate positively together. Do we all understand? Please keep your questions till the question section of the class, okay? I will come back to that. Okay, so I said the Swiss franc and gold, they correlate positively together. If gold is going up, the Swiss franc will also go up, or the Swiss franc will gain strength in its economy. Maduka, take for instance, for every box of noodles produced, we will save one bag of flour. Do you understand? So if a box of noodles costs $100, gold will also move up by $100. I'll use the same concept again. For every box of noodles produced, we'll save a bag of flour. Do you understand? I'm just using that as a life example, Okay, good. Now I said if a box of noodle goes from $100 to $150, gold we also, just an example, I'm not saying a box of noodles is equivalent to gold, but what I'm trying to explain is if it moves from $100 to 150, same thing will happen to gold. It will move from its current price and go higher. Now, when we bring it back to the financial markets, we said the Swiss franc is a safe haven and gold is also a safe haven. If gold goes up, the Swiss franc will go up. If gold goes down, the Swiss franc would also go down. Do we all understand now? We're trying to understand the correlation between currency pairs and gold or oil. Now, remember we said if oil goes up, CAD will go up because of CAD is a producer or a net exporter of oil, right? Now, if there is a fluctuation in oil prices, okay, that means if oil drops in value, the Japanese yen will increase in value. Why? The Japanese yen imports oil, so oil is cheaper for them to buy. If oil goes up, the Japanese yen loses value. Are we following? If you're following, please drop something in the chat box. Great. Now that we understand the major correlations between this pair, I hope we are all taking notes. So for the very last time, let's clear the whiteboard and align this properly. So let's go. We said correlations, the relationship. All up, CAD up. All down, CAD down. All up, JPY down. All down, JPY up. Gold up, dollar or USD down. Gold down, USD up. Okay, what else have I missed? Okay, gold up, USD, sorry, CHF up, gold down, CHF down. Okay, so do we all understand now? Do we understand now? Exactly. If your country buys oil, and the prices of oil goes up, your country economy would lose its value. Okay? CHF is the Swiss franc. Do we understand now? Have we all, did we take a screenshot or write this down before I clear it? Did we take a screenshot or write this down before I clear it? Okay, good. So I will be wiping this off my screen right now so we can proceed to the next thing. So we've talked about understanding what Forex and commodities are. We've talked about the personal relationships they both have between one another. Now, the question is, From everything I said, everything I've listed out, do you think this relationship, is it to your advantage or to your disadvantage? I'd like to make this an open discussion for us in the chat box. So let's talk. From everything said, do you think this relationship is to your advantage or to your disadvantage? It's an open discussion, okay? An open discussion. You can see a lot of people typing. Okay, so Karachi says when oil is up, it's to our advantage because our currency is messed up and we pack the dollars. Okay, Chuk said it gives you a heads up in the market. Kilichi says advantage. Kasim says both. Everybody says advantage. Tisha says it's to my advantage once I know when and what to buy. Nido says it all depends on what you're trading. I just said great advantage. Everybody said again that and disadvantages sometimes. Debbie says it's for advantage because if we're able to understand their relationships, we'll know what to buy and what to sell. Christian says it helps in making an informed decision with one's analysis. Troops is trying to correct Karachi that Nigeria do control. It's controlled by Europeans and Americans. Wow. Okay, I'm loving the conversation. Actually, it's wild, and it gives you an indication of which way the forex market will go. Brilliant. It's to an advantage in trading the currency. Okay. Okay. Yeah, I love everything being said, but to be very candid, as a financial trader or as a forex trader, or every single one of these things I've said or made mention of is to your advantage. Okay, it's to your advantage because it gives you an head up of what to do in the financial market. So even if the heads up is to your advantage, even if the heads up is to your advantage, it gives you a way of navigating price. Okay, it gives you a way of navigating price so that you can actually make the most out of the financial markets. So that is what it really is, an advantage so you can make the most out of the financial markets. So nobody's wrong, nobody is right. We all just give our thesis on the financial markets. So do we all understand? Do we all understand? If we do, please drop something in the chat box. And if you don't, drop something in the chat box. Okay, Kasim says no. Trying to stop sharing my screen. Okay, Kasim said no. Kasim, okay. Okay, Kasim, all I just said is if you know this information, if you know this information, they help you make better decisions when you trade the financial markets. That was all it just meant. Okay, that was all it meant. They help you make better decisions when you are trading the financial markets. That's just what they do. They help you make better decisions when you're trading the financial markets. That is all they do. Okay. Great. Okay, so are we all clear on that? Let me share my screen. Share my screen right now. How do you know the required information? I just give you all the required information. You know what I would advise is you go over this webinar once it's uploaded to YouTube or when you get the replay link. Now, capitalizing on this relationship to earn more from the financial markets, let's do a bit of chart work, okay? Let's do a bit of chart work. Let me share my screen. Are we creating two scenarios? No, you're not creating two scenarios. You just need to understand, is gold going up? When gold is going up, I'll be looking for sales on dollars, on all dollar pair or some dollar pairs. I'm looking for opportunities to sell. Then my technicals have to align with it. So let me show you an example. Let me show you an example, okay? Let me show you an example. Okay, so that's US 30. So this is DXY. This is dollar right here. Okay, this is dollar right here. Now, this is the daily chart on dollar. I was looking for selling opportunities on dollar and it sold back to where I expected and reversed immediately. It came to my area of interest. Okay, so knowing that dollars, let's check gold. Now, see gold. Dollar sold off. Look at what happened to gold. Gold bought. Okay, gold bought. And when gold bought, now let's look at this. It's quite funny. Actually, it's quite funny. When gold bought, I said this is where gold will get to before it sells off. And look at what happened. Gold got there and immediately it's rejected from that area. And I'm looking for selling opportunities. See, dollar also. I said if dollar gets to this daily OB, I'll be looking for buying opportunities. And dollar got to the daily OB, I'll be looking for buying opportunities. So all you need to understand is when dollar was selling, now, when dollar was selling from, let's see, let's mark that out. When dollar was selling from 31st of March till date, okay, 31st of March to 20th of April, what happened to gold? Now, gold, what happened to gold? Let's see what happened to gold. On the 31st of March till date, gold bought. Do you see? On the 31st of March till date, gold bought. So you just need to understand the relationship between gold and dollar for you to now make decisions. Now that you understand that, okay, gold is going to sell, that means dollar will rise in value. What will I be doing? I'll come to EURUSD. I'll be looking for selling opportunities. Now, let's quickly do a small technical analysis on EURUSD. Let's quickly do a small technical analysis on EURUSD. I want everybody to pay attention. So, if we look at dollar right from the onset, we have been bullish on dollar. This is a level 1 rise, level 2 rise, then level 3 peak formation right here. And when there's a peak formation, it's two things. Is either I'm looking for a reversal or continuation. Well, what happened? We had a reversal in price. Now, let's look at this. Let's pay close attention to this. Now, if we try as much as possible to mark out market structure here, we'd see we had a low value area in points, a high, a low right here, then a high right there, and a low right here, then just a major high right here. Okay. Now, this was the last significant low. So I understand the direction of price that it's on an uptrend. Low, high, higher, low. Sorry, lower, high. Sorry, higher, low, higher, high, higher, low, higher, high. So I can just delete all of that. And this was the last area of structure. What happened? Price broke market structure. So what I'll be looking for is what? Selling opportunities. So let's mark out dollar now. If we mark out dollars, we have this. We have this on dollar. And this. Now, you might be wondering, why am I not considering this as a lower high? Fine, I could consider this as a lower high. Then that means I have to consider this as a lower high. So what just formed today is my own lower high that I'll be looking for, which is this area. Why? Because there was imbalance in price, inefficiency in price, and we've came to fill that inefficiency and we traded back into this right here, this order block right here. So demand, sorry, supply. So we've traded back into that order block there. And what happened? We filled this inefficiency and also we grabbed liquidity sitting at this equal highs right here. So what will I be doing? I'll be looking for selling opportunities on dollar right now. I could blindly enter a sell on dollar right now, and I'm sure dollar would push to the downside, but it will be very, very wrong or not of a trader to do that. That's just pure gambling. So what do? I need to go to the 4-hour time frame. But before I go to the 4-hour time frame, I need to understand something on the daily time frame. This is the last low right here. This is the swing low right here. This is the swing low right here. So this is where my target is. This is where I'll be looking to take profit. If I sell dollar, this is where I'll be looking to take profit. That's what I'll be looking to take profit. So I need to go down to the 4-hour time frame. And on the 4-hour time frame, what do I want to see? I want to see reasons for me to sell. Now, if I'm going to sell this right here, I'll be selling if it breaks this, because this is an area of structure right here. So I'll be selling if it breaks this, but I could actually sell right now if I streamline to the 1-hour time frame. This is a mini structure right here. So I could now say, okay, if we break this and we retrace back into this, I will be looking for sales. But to make it more easy again for me, I could now go to the 15 minutes time frame or the 5 minutes if I like, and okay, mark out structure. Now on the 5 minutes time frame, I can see some things I like. So this is a clean low right here. And this was the last significant area of structure. We had price break this. So there we have a break in market structure, a BMS. What will I be expecting? I'll be expecting two things. It's either price trades back up here for me to get my sell entry. That means if I'll be entering my trade, yeah, I'll be looking to use like a 4 pip stop loss or maximum of 10 pips stop loss. Okay, I'll be looking to use like a 4 pip stop loss. 4 pip stop loss, and my target is still on the daily time frame. So you can see how, when you understand these concepts, how it helps reduce the whole that's a 90-hour trade right there. A 90-hour trade right there. Clean lows right here. If it does retrace back into this area, okay, it's broke, so we might not see a retracement back into that area anymore. So this can now be a BMS right here. Sorry. How do I get that candle up here? So it already broke though, so I can now say that's a BMS, and I'll just be looking for selling opportunities generally on ER USD. That's just the whole concept behind understanding these things. So okay, I've got a lot of chat, so let me just read through. So Chooks says Karachi, if we control our oil, will be strong in the world like Russia. And this is, I'm not really trying to hop into this at all because it's literally politics. And okay, let me just go to what Karachi says. Karachi says it looks new and sound confusing to me, sir. I like to watch other videos first. Yes, yes, yes. Do well to do that. Yeah, no problem. Me, I would try as much as possible to figure that out. So, did you guys now see how I was able to relate the fact that dollar would be strong? That means dollar would be going up now and gold would be going down, in figuring out why what's it called? Why ARUSD, I'll be looking for selling opportunities on ARUSD. Did you guys now understand how I was able to figure that out? Yeah, BMS, retest of previous structure, and all. Yeah, we all hold classes regularly. You've got nothing to worry about. So, do we all understand? If we do, please do let me know. And also to those that want something on this webinar, I'll reach out to you on WhatsApp or place a call to you, so we've got nothing to worry about. So please, let's ask questions. Let's ask questions. Yes, you can. You can practice first on the demo account. Actually, it's always appropriate to practice on a demo account. Okay, so let's just run a few polls. Okay, so I'm sending out the poll right now. So publish. So I just sent out the poll. Let's respond to it. Thank you. It's not really guesses, Karachi. It's not really guesses. It's understanding how this thing works. Remember, I called you yesterday and I explained quite a few things to you. You need to just be willing to understand that it's a learning curve and be willing to learn the way it is. Just learn how it works. Take our time to learn how it works. Okay, so let's respond to the polls, please, and also ask questions. Okay, Kaji said, yes, sir, you're right. Using the word guess make it look like gambling, but it can't be gambling when you know. True. It can never be gambling when you know. So Kelechi said, Kelechi, let's just watch what the future has to offer. I'm not a financial advisor, so I can't really say on that. Okay, I can't really give a pinpoint on that. What I can say, let's just watch. Yes, a short on USD is a high probability entry setup. Okay. So I just sent in another poll right now. Is this your first time on the webinar? Is this your first time? I just sent in another poll. Is this your first time on the webinar? Okay. I use Bloomberg or CNBC address. I use Bloomberg or CNBC. Okay, so let's go and do CHF JPY. I really don't touch CHF that much because it's a safe haven and the currency pair is actually quite not something I like. Okay, let's just put it that way. So CHF JPY, let's go. I was actually looking for higher prices on this. And okay, so CHF JPY. Now, what's the current state of oil? Let's check oil. Let's check the current state of oil. So currently we can see oil is in an uptrend and has literally created clean highs, or no, it didn't create clean highs actually. It has grabbed liquidity right here. Okay, it has grabbed liquidity right there, and to the daily time frame, it has broken structure. Okay, So I need to understand oil properly. That's why I'm doing all of this. It has broken structure and it has came to fill this imbalance right here. And also grabbed this liquidity sitting up above right here. Let's grab that right there. And we have one sitting down below here. Okay, so what do I expect from oil? I can either see oil pushing back down into this area right here. So that's what I think will happen. So I think oil would actually become weak. Okay, oil will be weak and we'll see it trade back to around the 53K level before we now look for buying opportunities on oil. So now, understanding that oil might fall, I can now come and check CHFJPY. And now CHFJPY, the price action is very, 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 very not okay at all. Okay, so if we look at this closely, this is actually clean lows, and this is a source right here. Sorry, let me just okay. This is source right here where we might see price push down from before we see it go back up. So it's two ways. We either see CHFJPY push to this level, then reverse, or push to this level, then. But I'll be looking for selling opportunities on CHFJPY. But I don't trade CHFJPY, so that's just it. Yes, exactly, Karachi, exactly. So, Christian, that's just it. Like that's just all it is. Do you understand? Christian, do you understand? Okay, he isn't responding. So in the absence of no further questions, we'll be calling the webinar a day. Okay, I'll see you on the next webinar. But before we go, before we go, let's do a quick exercise. So I don't need to start sending you messages over and over again. We already know that we have classes on Thursday, okay? On Thursday, and for us to enroll in that class, we need to sign up. So let's sign up. Yeah, I'll be sending that out. I'll be sending that out after the webinar. Okay, I'll reach out to you. Okay, so all you need to do is sign up to the next class using the link below, and you get something from me. So the next class we'll be talking about generally questions in Forex, and ask me anything session. You can ask me anything about the financial markets. It's ask me anything, the Forex edition. So let's all hop on it and let's all sign up so we can get the best of it. Till we meet again on Thursday, next class, stay safe.